issuing the notes means bank note, that is currency notes. If they are started making the currency notes means everything is a fake note, because everyone their own like emblem they'll be making. So the main work of the RBI is they are issue a bank notes to maintain the reserves with a view to securing the monetary stability. So that is always they're making the reserve. That is a liquidity reserve they will be put aside whenever there is a need of that money. So they'll be maintaining. So this is a RBI, they're maintaining with the reserve, that is a monetary stability. And even they operate the credit and currency system. So credit and currency system also it will be making in the country. It's also one of the advantage with the RBI. Now we'll see the RBI. It has a RBI. It is classified into two. One is a scheduled bank and the other one is a unscheduled bank. And this is a scheduled banks. It is classified again into two. One is a commercial banks and the other one is a cooperative bank. Cooperative banks where there is a individual people, they come forward. They themselves initiatively, they come forward and they'll make one society and they'll run the banks. So that is in the villages, there is a cooperative sector, there is rural cooperative banks and cooperative sectors. So these are the banks will be useful for only rural areas. They give the loans to the agricultural people. Okay. And here, this commercial bank is one of the most important one. Under this, we have the public sector banks, private sector bank. Sir, chala se start chesam class mein. So here there is a public sector banks and private sector banks and foreign sector bank, rural, that is RRBs. So these all are banks comes under the commercial banks. So this bank will comes works under the RBI, that is scheduled bank. So that is scheduled, they make a scheduled banks in a systematic way where they'll be giving the loans and they'll be seeing the taking the giving the lending the loans, and there is also they are giving the lending and accepting the loans, and that is a money deposits. RBI and associate banks, SBI and the associate banks, that is banks also comes under the public sector. Other nationalized banks and other public sector banks, these comes under the public sector banks. So now private sector banks, we have a number of banks we have. So these are the three banks where it is comes under the commercial, that is a public sector bank. So you can take this one as a screenshot mark. RBI introduction and RBI, this is flow chart. Are you all there?
Yes, ma'am.
Yes, ma'am. This one RBI introduction, you take the screenshot mark. Next one is a RBI, that is classification of RBI. Or
yes, ma'am.
Now we'll see what are the functions of RBI. So I want you to give me the explanation with the RBI function of the RBI. Anyone?
One is the issue of currency note. I think so. They are the sole one who issue the currency.
Yes.
So far I am concerned. Credit creation might be one from their end.
Yes.
This two I know. Apart from that, no such idea. Only this two I know, ma'am.
So we'll see. This is the main important one. That is a function of the. These are the four. There'll be issue of bank notes. So every time, every day, they'll not print the notes. So whenever the government says, they will print the notes and they'll be making the old notes will be taken out and they will be issuing the note, not only notes, the currency also, that is coins, and the bankers to government. So these are the bankers to government, where many of the banks are also under the RBI. So they'll be acting as a banker to the government and custodian of foreign exchange. Foreign exchange, what is a custodian? So when we are, it is they are giving the currency notes. So that is supply of the currency notes. If you are going to the other countries, so that currency also will be exchanged. And lender of the last resort. There's a lenders also, they'll be lending the money from the other banks, and they'll be making the activities. So yeah, these are the this is the main functions. Only this, whatever it is there in this, that is in the boxes, that is in flow chart, that you can write for your functions of RBI. Take the screenshot. I'll explain in detail. So your issuer, currency, bankers bank, monetary authority, that is a money authority, regulator of the financial system, regulator of payment and settlement, development functions, detecting of fake currency. Detecting of fake currency. Now it is we are seeing now. Is it?
Yes, ma'am.
So detecting the fake currency also, it will be taken by the, that is also one of function of the RBI. And managing the foreign exchange, we are making the exchange, you know, and bankers of the government. And here we have some of the developmental promotional functions of RBI. It will be development for the financial system. Always it's making the financial system. It will be makes the development in the system of the finance. And next one is the development of agriculture. In agriculture, in the means in the from the olden days, the people in the, that is money lenders, they used to manipulate the farmers. So if they are taking the lending the money 1,000 rupees with, they are adding one more zero, and they are telling that they used to tell that they have lent the 10,000 rupees. So for that, it was manipulating the money lenders in the villages. So these are the banks we have established, like RRB. These are the banks where they are providing the loans to the farmers. Is it clear? So that is a development of agriculture. So why they are giving the loans to these people? For buying the that is machineries or fertilizers or the development of the land during the time of that is short-term loans and long-term loans be given by these banks. So these banks directly, these banks will not give. That is commercial banks. Just now I showed this one, no, cooperative banks. Is it clear?
Okay,
Yes,
ma'am.
ma'am.
And a provision of industrial finance. So in industrial finance, these are the very big industries where an individual person they cannot establish. So that is a finance will be given to the people who are making the industries, industrial finance also. And provision of training, collection of data, and publication of reports, and the promotion of banking habits of the people. And even they are making the export through refinance. Refinance means what?
Money. Refinance.
Refinance.
Yes.
I think you have heard about the insurance and reinsurance.
Yes, ma'am.
It mean renewals, right?
No, not
Not
renewals.
renewable.
Suppose I'm
Means
having
the
the company.
return.
I'm having the company, insurance company, where
Okay.
you are taking the insurance from my company. So
Okay.
what I'll do, I'll be making that all insurance, whatever the policies are there, again I'll take to the other company, and again I'll make the reinsurance.
Okay.
Okay.
Is it clear? So this is the promotion of export through free finance. So the people who are taking the finance from me, so again, that papers take a very big, huge amount, not a very small amount. So they'll be not dealing with the very less amount, the huge amounts they'll be taking. So they will be going with the refinance of the people where they are taking the loans. Refinancing. Once you are making the finance, again taking that, they'll be making the refinance. Now we'll see banker to bank. Banker to bank means always this is the banks are all making the accounts of scheduled banks. They are making the bank accounts, maintaining the bank accounts with the scheduled bank. And RBI, it regulates the opening and installation of ATM fresh currency notes for the ATMs are supplied by the RBI. Are you getting this point? Nowadays,
yes.
RBI is making the regulation that is opening or the installation of the ATMs. That is a fresh notes. Means day to day there will be installation. They are making the installation of the notes, no? So they'll be supplied by the RBI. So RBI means every day they'll be getting amount from RBI. Again, they'll be making the regulation. So these are the banker to bank. RBI. RBI is very big bank. And it is a banker to other small banks. Okay. RBI regulates the opening of branches by bank. Now SBI. SBI, it is a very big branch. And now again, it is making small branches in every place. Nowadays, the relation between the customer and the bank has less. You know, it has become a very less contact. Are you getting my point?
Yes, ma'am.
Yes, ma'am.
Here, nowadays, everyone is not going to the bank. Is it clear?
Okay.
If they want to deposit also, they are going to the ATM machines and they are depositing the money. Wherever it is not the possibility, they are going to the bank. So if suppose I am in Hyderabad, my own bank is in Hyderabad, I am working in somewhere. From there also I can do my transactions. It's not necessary to come to my bank only to withdraw the amount. So these are the facilities. It is all made by the bank. That is the RBI. Is it clear?
Okay, ma'am.
So even is a banker to bank, it ensures that all the NBFCs, they follow the KYC guidelines. KYC means
Know your customer.
know your customer. So by seeing that IFC code, you'll be knowing that from which branch is this a particular customer is belongs. तभी बोलते ना आप अकाउंट नंबर देते ही उसके साथ IFC कोड भी देना.
Yes, right, ma'am.
Yes.
IFC, without the IFC code, they are not accepting. So
Yes.
with this KYC means all your that is they'll be knowing that who is my customer. Is it clear? That is a RBI is the banker to banks. Is it clear?
Yes,
They every day they will have the transaction with the repo. Repo and repo means suppose if you are taking the loans from the other RBI branch, so they will be having the charging the interest. So even if we suppose if tomorrow is Saturday, they want the money, they lend the money. So even the RBI also can lend the money from the other banks. Is it clear?
Why so, ma'am?
Sometimes it will be they'll also lend the money. That is a repo time. So next class I'll tell about that. That is it comes in the RBI only. Next is a control of credit. Control of credit. It is also one of the function of the RBI. Credit control is a major weapon. Always they have to control the credit. Otherwise, always that will become poverty line will cross will goes into the inflation. So credit control is a major weapon of the RBI used to control the demand and supply of money in the economy. Whatever the demand, controlling the demand and supply always in the money that is in the economy. It is a credit control. It is a weapon. Is it clear?
Ma'am, credit control and credit creation is same or different, ma'am?
Creation is different. Credit control is different.
Oh, okay. Ma'am, does credit creation falls under the functions of the bank, ma'am?
Not always.
Okay, ma'am.
Next is a regulatory and supervisory. It is as a regulatory, that is a conferred as the RBI. It is also act as a banking act, has both conferred extensive power. of regulation. Regulate, always regulatory supervision. Always, this is a RBI will be supervision on a small banks. Is it clear? Supervision. Supervision nahi hai to whatever they are going to the limits of the rules and regulation which is made by the RBI. Okay, there'll be both the conferred that is extensive powers of the regulations and the supervisions to the RBI, that is over commercial and the cooperative banks to check the malpractices and protect the interest of the investor. So what do you mean by? So here it is both our extensive power, that is a supervision to the RBI over the commercial banks and cooperative banks. These all banks where they are all checking the malpractices. If they are going with a wrong mistake, if they are making the mistakes, or they have to, it is also one of the that is a regulatory, that is supervision of the RBI, whether they are protecting the interest of the interest on the investors or not. Is it clear?
Yes, ma'am.
Next one is a government bank to the government, banker to government. Just now I have shown in the one figure in the flow chart. It is a banker to government undertaking the banking transaction, whatever the transactions for state and central government, they'll be always facilitating the receipts and payments to maintain their accounts. You know, no, receipts means what, payments means what?
Yes, ma'am.
Receipt means what, payments means what? What is the meaning of receipts and the payments?
Receive means receiving something, and payments is the to make someone's payment, right?
Receipts means where the income we are receiving. Payments where we are making the
expenditure.
So that is the receipts is the income, payments is the expenditure. So this is a transaction, banking transaction, which is then that is a transaction for the state government and the central government. What are things that is a facilitating the receipts and the payments? This is a maintaining their accounts. So this is the bankers to the government. Is it clear? And you are managing the government's domestic debts with the objective of raising the required amount of public debt in a cost-effective and timely manner. So there is a cost-effective and the public debts, whatever the public timely, we are managing or not. Domestic debts means what? Domestic, which is very useful in their daily life. So daily the government, they are maintaining the domestic activities. And next is developing the market for government securities to enable the government to raise the debts at a reasonable cost. So these are the banks. Even that is share market, it is also one of the things. It is also connected with the RBI. Is it clear?
Yes, ma'am.
So these are the things where the development, the market, the government securities also, then they are the bankers to government. Issue of currency. This is the issue of currency. They are making ensure the adequate quantity. Means kitna bolte utna nahi. Adequate quantity is supplies of currency notes and the coins of good quality. अपन fake notes देखते ही पहचान देते हैं, मालूम है?
Yes, ma'am.
Because the quality of the paper will be different.
Exactly.
So yeah, this is a currency notes. And what are the more essential things we'll be seeing, whether it is a fake notes or original notes? How can you say that it is a fake notes and currency note? कैसे पहचान सकते हैं आप?
The silver lining will be missing, right? One silver lining used to be there in the meat of the currency.
Yes. One more.
That's one. One more
Okay.
is there. The other is the paper quality will be different, right, ma'am?
One more.
Some special symbol.
The image of Mahatma Gandhi will be only appear on the white screen that has been displayed on the note.
So on the both side we can see that.
Yeah, exactly.
One more.
Even the
fake.
number that is, the
Huh?
currency number that is mentioned over there on the top of the headings, it is somewhere like misplacing. The
Okay.
details are not to the figure, I believe.
Okay, that's right. Or
And we can identify serial numbers also.
okay, even the fake notes also they put the serial numbers. Or
Languages.
सब बोल रहे नोट के ऊपर क्या क्या सब पूरा एक बुलटा रहे. Authentication.
Yeah, right, ma'am.
That is RBI governor signature.
Yes,
That is the main thing.
this is the main thing. Yes.
So you are telling us languages, that is everything you are telling, but the signature. So that is where the currency notes will be adequately the quantity, the supply, the currency notes, the coins of the good quality. So these are the things they have to issue. Issue the new currency and destroy. जैसा पुराने notes है तो नया note आ गया वो तो नहीं है. They will destroy the old notes. Issue new currency and destroy the currency and the coins not fit for circulation. 5 rupees. When I was very small, I used to see that 20 paisa. Now I cannot see. That is, there is no circulation. 1 paisa also have seen. That is no circulation. 25 paisa have seen. No circulation now. 5 paisa. Can you see now?
No.
So they'll stop the circulation. They're not fit for circulation. It has to keep in the form of gold and the foreign security. Jesa keep that is in the form. Jesa equal to अब point करना है, currency print करना है, तो equal to that we have to put the gold as a security. Gold and foreign securities रखे तो they'll be issued, coins and the notes will be issued. That is under the statutory rules.
Ma'am, kindly repeat once again. I didn't understand this point, ma'am.
So here it has to keep in the form of gold and foreign security as per the statutory rules against the notes and coins to be issued. तो उसके हिसाब से अब suppose if you are going to print some more note, उसका value उतना gold and security, foreign securities should be deposited.
Okay.
That is
This
the
is the
statutory
condition.
rule.
Okay,
That is the condition. ऐसा ही नहीं करते. क्यों बोलते जब किसके मोहम्मद बिन तुगलक के टाइम पे they have every house has become a printing machine. Printing of the coins. So to eradicate उसको निकालने के लिए ऐसा लेवल तो हर एक घर में printing machine होगा. So no one is the poor. Everyone is the rich people. So that's why they made that as a copper coins. Everyone used to stick that. So copper coins को eliminate करके they said that if you are giving us the gold coins or the silver coins, because everyone cannot afford the gold and silver coins.
Exactly.
So that is a value will be making. So here also to issuing the currency also, they have to keep in the form of gold and the foreign security. That is against the note and the coins issued. Utna value you have to. Is it clear? वैसा नहीं करे RBI अपने country में छे इतने notes बोल तो इतने notes छपा सकते. It's not like that. You cannot print and even until unless it is given the signal from the parliament. Is it clear?
Yes, ma'am.
Next is a developmental role. Developmental role means they want to develop the quality of the banking system in India. Now, it has a very vast development it has making. Kitna vast technology develop ho raha, it's the same way they are making. So sitting at home only, they are making all the things with the help of the banks. If you want to deposit, if you want to transfer, everything, banking is given the development, the quality of the banking system. Is it clear?
Yes.
जब अपन कुछ भी इंस्टॉलमेंट में लेना है बोले तो बैंक में जाके डिपॉजिट करना था. Now what they are doing? What is the development? First development. Can you tell me?
Online banking, ma'am.
So what is the development? Tell me. Yes. Sarah? Malik?
Yes, ma'am.
So what is
Yes,
the
ma'am.
development? So if you are making any loans, if you are taking from anywhere, you need not to go to the bank to deposit amount for the installment amount. They will be making the EC. Directly they'll deduct the amount from your account.
ACH system, yes.
So that is one. And if you want international, if you want to make the changes, that also you can make it directly sitting at home. That is online. And net banking, through net banking. Is it? So
Yes,
these
ma'am. The
are
mode.
all the developmental role. So these are the promotional, that is the functions. 1 minute, sorry. So next one is perform, say, wide range of promotional functions to support the national objective. So it is also development. National objective, it is where they want to make the support for the national way, where this national, it is a farming, that is agriculture. To make the financial institution, to establish the financial institutions of the national importance, they are giving the NABARD and the IDBI. These are the two banks, these are financial institutions. They are developing the IDBI, it is making the development for the industry side. NABARD is making the development for in the agriculture side. Is it clear?
Yes, ma'am.
Yes.
And next is a physical policy. What is a physical policy? So physical policy, where it is involved the use of the government, where the spending, the tax spending, government spendings and the taxation and borrowing to affect the level and growth for the aggregate demand, output and the jobs. So yeah, these are always, this is a physical policies where it is involved the use of a government. So government, what it is using and how much they are spending, what is the borrowing, level effect of the level of the growth and aggregate the demand for the output. There is a making the use for changing the pattern spending, that is goods and services, the pattern of spending on the goods and services. And it is also means to redistribution of income and wealth. Redistribution. Once it is distributed, the income or the wealth, again it will be redistributed. In example for that, it is a changing the tax rate on different level of income or wealth. So we have a taxation, slab rates. That is the age of the people 60 below the 60 years, they have the exemption is 2,50,000, and the people who are senior citizen, it has the exemption is a 3 lakhs. That is a different tax rates they have, different changing the tax rates that is in the different level of the income or the wealth. And it is also an instrument for the micro. Micro means very small, microeconomic government, where they can make the free market failures. So wherever they are making the intervention to correct for the free market failures, that is pollution or the suboptimal pollution, that is making the provision for the public or merit of the goods. And there is a aggregate demand, and it is also aggregate supply. Aggregate means what? What is the meaning of aggregate?
Total.
So it is a change of the demand and the supply. So what is the demand and supply? What is the government spending and what they are borrowing, the effect, that is the level and the growth of the demand, they'll be making the output of the jobs. There is a fiscal policy. Now we'll see the fiscal policy meaning. The word fisc means it is a state treasury. State treasury, that is a state treasury means that is a whatever the income. And the fiscal policy refers the policy where is concerned with the use of the state treasury. Treasury means no, like bank also we can say that, the money of the government we can say that, or the government finances to achieve the macroeconomic goals. Macro means very large, very big, very wide. So any decision to change the level and the composition or timing of government expenditure or to vary the burden, the structure or the frequency of the tax payment. Means whatever the structure they made, the payment for the structure, that is tax payment, it is a fiscal policy. So here it is a fisc means it is a treasurer where the government policies where it is a concern, it is a concern in the use of the state treasuries, that is a government finances, that is where they have the main goal for making the macroeconomics. Then and even they are taking the decisions if the monetary where these are the government, we can say that RBI, it is also comes under the RBI, the fiscal monetary policy and the fiscal policy. We'll see the differences now. And any decision if you want to change in any level, change in the levels, composition, the government expenditure, what their expenditure they are making, they're spending the money for where they are getting the frequency of the tax payment. That is this one is a meaning they have given. And one more, we'll see that fiscal policy is conducted by the federal government, particularly the president and the Congress. Its focus is on the taxing, that is a government spending and the government transfer. So here, government spending and government transfer, these are the two things where it concentrate the fiscal policy, concentrate the government spending and the government transfer. What are the things? The government spending is more on the police, cars, parks, military, GDP. You know that? Because they want the security. And next one is a transfer of payment. There is transfer. What are the transfers? There is a social security, Medicare, and food stamps. These are the payments where they will be transferring. So for the poor people, that is the stamp. These are the social securities we will be making. And taxation, sales tax for each and everything. Sales. If you are selling anything, that is a tax you have to. If you have the property tax you have to. And if you are earning, you have to pay the income tax. Is it clear?
Yes, ma'am.
And next is a borrowing. These are the four things where it is focused. That is taxing, that is taxation, government spending, government transfer, and the borrowing. Khali kharcha nahi karta, spend nahi karta, collect nahi karta. Even it's borrow. Government can borrow from banks to make up the shortfall of tax revenue. Kaha to bhi, if it is not sufficient, they will borrow the money from the banks. Is it clear? So this will be covered later. The focus here for fiscal policy will be the first three. First three say, paise aaye to iche, everything will be fine. Otherwise, the government has to borrow the money from the banks. वो भी कैसा borrow करते हैं? They have to put the security. Then only they can borrow it. So that's why they will be focused on the first three. That is a fiscal policy. That is a government spending, transfer payment, taxation. Is it clear?
Yes, ma'am.
Any doubt?
No, ma'am.
Next, fiscal policy. Fiscal policy, it is a term the expansionary and contractionary. Here, expansionary fiscal policy means where it helps in spread up the economy, or they want to increase the economic growth. Expansion karna means increase hona.
Okay.
Is it clear? And contractionary, that is fiscal policy, helps. They have to make the slow. So here, contractionary, that fiscal policy helps us slow down the economy, a slow economic growth. Contract growth, whatever, just we are paying amount out, we don't have any incomes, just expenditure we are doing, then it will come under the slow down the economy. So this is the contractionary fiscal policy. It has become during the time of COVID. So the economy, everything, the GDP has fallen down. Is it clear?
Yes, ma'am.
So here we have the two types of fiscal policies. Just now I shown you a picture that is two different types of fiscal policies. Don't forget this one. If you, whatever I'm showing in the very gist, you can explain, you can elaborate. So we have the two types of fiscal policies. One is a discretionary, the other one is a non-discretionary. So yeah, this is a fiscal policy that comes about the planned changes, that is G and T, that the government brings in the response of the economic situation. Always discretionary, it makes the describing, that is whatever the responses, where it is economic situation, what are the growth, and whatever the taxes, everything it will be making, giving the brings into the response of the economic situation. Non-discretionary fiscal policy, it is comes about the design of spending taxes. Whatever you are spending the taxes, that you will be making the design. ऐसा कि design में the designer नहीं होता. So that is the thing is where for what you want to spend it, and spending and whatever where you want to make the taxes. So there is no government officials actively determining these changes. Is it clear? If it is the government, they are not making any changes in the activities. That is, they are not making the properly the spending of the taxes. Now, government role in economy. Yes, government role in economy. So these are the government role. In this, these two are very important. One is a monetary policy, the other one is a fiscal policy. Monetary policy is always comes under the head of the RBI. Is it bonds, reserves, interest rates? These are the bonds, reserves also, reserves means if anything, it is in a, if you are in a trouble, the country is in trouble, the RBI it will keep a credit control reserves in the banks and the bonds, interest rates. Just if they are borrowing the money from the banks, other banks means they will take the bonds, like whatever the bonds or whatever the transaction, that all they'll keep as a security and they'll take the loan. And fiscal policy, it is a taxing and spending. Just now I showed there is a three, the government spending amount, taxing is, that is a taxation where you are paying the tax for the property, for your income, for your the other thing. So each and everywhere you are paying the taxes. If you are going to the street shop or any shopping mall or recreation also, if you are going, you are paying the tax. You know that?
Yes, ma'am.
That is a GST you are paying.
Yes, yes.
If you are taking the sweet and eating there only one piece of a sweet, there is no GST. If you are making the pack, then is the GST in your bill. You know that?
Yes, ma'am.
Yes, ma'am.
Next is objectives of a fiscal policy. That is a fiscal policy. It is mobilization of resources. Means effective mobilizing. Mobilizing means moving, rotation. And that is a main in the fiscal policy. That is a main objective of the fiscal policy. And reduction in inequalities. Reducing inequalities, that is income and wealth. They want to reduce it. That is a inequalities. Price stability and cost of inflation. They want to make this, there is a price stability and the cost of the inflation. And next is a employment generation. They want to make the generation that is generating the employment, increasing the employment system, and reducing the deficit, the banks, that is BOP, balance of the payment. So deficit means what? Negative value.
Negative.
So they want to reducing the deficit in the balance of payment. And they are increasing the national income. They want to increase the national income. Otherwise, our country goes in a underdeveloped country. And even they are started for development of a infrastructure. See here, the taxation in India. One is a direct taxes, the other one is a indirect taxes. One is a taxes directly, the taxpayer, an individual is paying the tax to the government. That is tax collected by the government directly from the taxpayer. Is it clear? I think if you are, when you are taking the salary also, you will also pay the tax to the government. So
Yes,
that
ma'am.
comes under the direct tax. And the goods and the GST, that is an indirect tax. Where this is a tax where you are making that government to the lead retailer. So when the government, if an industry, one industry hai, so in that industry, if they are making the production, so they will not pay the tax. So whatever the exclusive, inclusive, so they will be writing on the product, when it is a finished pack. So no one will pay the tax. So here the government will pay that a little bit. The retailer will pay the tax to the government. The next taxpayer pays to the retailer. So this retailer will collect the tax from the customer only. He is not from his pocket. So your government tax from the manufacturer, government collects the tax from the manufacturer and the retailer. Manufacturer collects from the retailer. At end, retailer collect the whole amount of the tax from the actual taxpayer. Pay karta government ko. But this is the end. At the end, this person will collect the whole amount, what he paid to the government, that one and the other payment of the taxpayer, everything will be collected by the retailer.
Okay.
अब अपन शॉप को जा रहे, रिटेलर को अपन पे कर रहे GST बोल के,
Yes, ma'am.
वो GST, that tax what you are paying on behalf of him also our amount we are paying. उन्होंने पे करता, शॉपकीपर पे करता टैक्स के लिए, उन्हें फिर बाद में अपने पास से भी कलेक्ट कर लेता वो टैक्स. Is it clear?
Yes, ma'am.
And next is the proposed tax structure in India. So the tax structure, this I think we have this question. So you can take this one is a flow chart. Screenshot le lo. Proposed tax structure in India.
Ma'am, one doubt.
Tell me, ma.
Fiscal policy also undercome RBI, ma'am.
No. Rules will be different.
Okay.
The role just now have shown you that is a role of the government in the economy. Economy brane ke liye. So
Okay.
these are the two policies. So in this monetary policy and fiscal policy, this one is making the money
Okay.
and this is collecting the money.
Okay, ma'am. Got it, ma'am.
So yeah, this is a proposed tax. This is a structure, you can take it. Tax structure, it is classified into two. One is a direct tax, the other one is a indirect tax. Indirect tax is nothing but it is a GST. That is except customs. Except customs. Custom, you know, custom duties.
Yes, ma'am.
When you are exporting the goods from one place to the other place
Need
where
to
you
pay,
have to
yes.
pay the tax.
Yes.
That is interstate and intrastate.
Interest.
So your direct tax, where you are paying the income tax and the wealth tax directly, the customer and individual is directly paying to the government. So these are the indirect taxes where it is GST, SGS. Intra-state means central and the state. Both it will comes. Interstate, only the central government, the tax will be paid. So this is the tax where you are customs, that is the customers will pay, not the owner. If once the owner pays the taxes to the government, that owner's amount is also collected from the customer. Is it clear, ma'am?
Yes, ma'am.
Yes.
Yeah, this one also you take the screenshot. Ma'am. Types of deficit. That is on the basis of financing, on the basis type of transaction. This is very important for your essay question. Distinguish between the monetary policy and the fiscal policy. Take it, ma'am. Now you will be able to understand what is a monetary policy and fiscal policy. Monetary policy means it is a macro. It is a macro and means very big, very wide policy that is refers to the action undertaken by the nations, that is central bank. Central banks, nothing but this is the RBI. Okay, to control the money supply. So it's the central bank also, they will be controlling the money supply. It involves the management of money supply and interest rates to achieve the macro growth goals such as inflation, consumption, growth, liquidity, which is sustainable economic growth. So those it is very important for the economic growth. That all will be. It is a very wide. It's not very small. It is not the micro. When it is comes to the fiscal policy, it is always government revenue collection and expenditure. That is on the country's economic condition. So what are the things it is? It includes the aggregate demand of goods and supplies, that is the GST, and employment, inflation, and economic growth. So see here, this is the different. It is a monetary policy. Always they are controlling the money supply.
Yes.
But
ma'am.
here, economic conditions. It is influenced, that is monetary policy, it is influenced by change in the interest rates and money supply. the interest rate, whatever the interest rates is made by the government, and even whatever the money supply, that is more very much it is influenced. But the fiscal policy, it is influenced by the change in government, where it's spending the tax rates. So whatever spending, whatever the amount is spent by the government, and what is the tax rate. Next is a monetary policy, where it is managed by the central government of the country, and fiscal policy is determined by the country government. Sorry, are you getting?
Yes, ma'am.
Here, monetary policy, that is tools, whatever the tools it is includes in the monetary policy, that is discount rates, open market operation, interest on reserves. But here in the fiscal policy, the tools are include the taxes and the public spending. And it is less direct impact on the country, but it is direct impact. It is more impact on the country's economy, fiscal policy. And there is a risk here is the loose monetary policy may increase. It can increase the money supply excessively. But here the risk is here usually the government has to borrow the funds for additional expenses. If they want to go with the additional expenses, in the fiscal policy, they have to borrow the money from the other, that is a bank, the debt burden of the country. Here is a political influence that is generally low and independent. This monetary policy, it is a independent, and it is politically extremely high. Here monetary policy is generally it is low, but here it is fiscal policy is extremely very high. It's clear?
Yes,
Any
ma'am.
Yes, Malik.
Yes, ma'am, it's clear, ma'am.
So this one you can take for your reference for your exam.
Okay, ma'am.
Differences. So now it is time is up. They are giving the signal for me to stop the class.
Okay, ma'am. Thank you, ma'am.
Thank you,
Continue in the
ma'am.
next class.
Sure, ma'am, sure. Thank you so much.
Okay, ma'am.